Welcome back. We are now hearing the likes of billionaire Tim Draper saying that Bitcoin is going to infinity soon with these amazing eyebrows. But there is a risk in the markets, in my view, as the irresponsibly long MicroStrategy crowd is asking, what do we call this kind of candle? Well, in my view, this candle is called exit liquidity for the billionaires and the multimillionaires and the smart money. And this is what we're going to be talking about in this video. Are we at the top of the market? And if we are not at the top of the market, or maybe we are, what are those signals? What are the things that we should be looking for that we are entering the peak phase of the market? Because as I've explained endlessly on this channel, the 12 to 18 month time frame after the Bitcoin halving period, which we are in when I'm recording this video in the middle of 2025, this is the most volatile that we have seen in historical context during these Bitcoin cycles. And now we're hearing about all of this extended cycle nonsense, the same thing that we heard last cycle, to really just kind of keep everybody on the hook. Oh, keep buying the dips. We're going to hit the top next year, not this year. Meanwhile, all of the billionaires are exiting because at the end of the day, the macro thesis about crypto and Bitcoin that it is going to go to infinity, right? It's going to keep going up forever as they continue to debase the currency. This is accurate, and I still believe this, but that doesn't mean that the markets don't go in waves and the markets don't have cycles. They do, and we are in a cycle right now, in my view, at the end stages. So we're going to be talking about what the top signals are. We're going to actually go through a big MicroStrategy bull selling his entire multi-million-dollar portfolio in MicroStrategy and go through the reasons why and show you that he probably is selling at the right time at the potential top of the market. Don't forget to give this video a free thumbs up. Also hit that subscribe button. That way you never miss a new video. We talk about macro crypto and really zooming out to understand the big picture in crypto and how we can capitalize on this and make money in the markets. Nothing I say is financial advice. Let's get right into today's topics. So we are seeing a lot of bullish sentiment in the market, right? A lot of bullish news, a lot of bullish announcements, things like this. JP Morgan's investments in Bitcoin ETFs increased to $1.7 billion. And so a lot of people hear this and they're like, wow, all of these, institutions and the banks, they're buying Bitcoin or Bitcoin ETFs. And so the price is going to keep going up. And then you have billionaires like Tim Draper saying Bitcoin is going to infinity. If you guys don't know, he's a very big Bitcoin maximalist for many years, and he is a billionaire. And let's listen to what he says.
The price of Bitcoin, I did say 250,000 by the end of this year, but you go out 10 years and the answer is infinity against the dollar, because there won't be a dollar. There won't be a need to have a dollar. Once I can buy my food, my clothing, my shelter, pay my taxes all in Bitcoin, and it's a better way to collect taxes for sure, then there won't be any reason to hold on to any Bitcoin. I mean, to hold on to any dollars.
Now, what he's talking about is, the dollar losing all of its value and making payments in Bitcoin, whether we make payments in Bitcoin or digital dollars like stable coins, I don't know. But the point here is that there's a lot of bullishness on really the whole digital asset sector. And I think that this is very, very, very good for the whole crypto ecosystem, especially for the longer term. But there's a lot of things that have been going on in crypto that everybody is anticipating that may not actually be happening. Strategic Bitcoin reserve, Bitcoin laws, stable coin laws, no tax on crypto capital gains, et cetera, et cetera. Like I can keep going on and on. There's a lot of things that everybody was anticipating, but whether those things actually get implemented or when they get implemented, because everybody thinks it's going to happen in 2025. What happens if we end up at the end of 2025 and there has been basically no progress on Bitcoin, besides obviously in the regulatory front and things like that, but in terms of acquiring Bitcoin? Well, listen, guys, I do think in the middle of 2025, we are now in or at or close to the top of the market. The further we go, the closer we are. This is the same thing that I said last cycle, and it's a very accurate statement because the bear market is coming at some point in the future, maybe 10 years from now, maybe 5 years from now. But again, the closer we go, the further we go, the closer we are to it. And so if you're not thinking that way, all you're going to be thinking about is bullishness, bullishness, bullishness. We're going higher, 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 higher. And then there's other videos like this. A former finance professor, he says, after 25 years teaching finance, I realized at age 58, if the money printer grows 8 to 10% annually and the S&P 500 returns 9%, it's just treading water. True wealth comes from outpacing the money printer, and that is the Bitcoin journey. And this is what I always tell you guys. Bitcoin, like all roads lead to Bitcoin, right? But this is going to take time. It's going to take time for institutions to really dive in deep. If we hear about GameStop buying Bitcoin or, JP Morgan buying Bitcoin ETFs, these are one-time purchases. Keep that in mind. Maybe they'll purchase more in the future, but a company like GameStop, they're buying the Bitcoin because they're following the MicroStrategy thesis, but they're also buying at the top of the market as a last-ditch effort to save their business. So what happens in a bear market? Well, I mean, you guys have to remember, for as many people as betting for the markets to go higher, there's a lot of people betting against the markets going higher. So you're also fighting against that. And so maybe later in the video, we'll actually play this from the professor so that you guys can hear this. But I really wanted to show you guys this to kind of show you where we are, right? All of this bullish sentiment. And then we have this, right? The irresponsibly long MicroStrategy group. And by the way, like, I don't even think some of these people realize, like, they're in the group called irresponsibly long. What they're doing is not being responsible with their money, right? And so when I saw this, it started to bring me into this journey of understanding the top signals that we're seeing, the signals that tell us this is the time to sell, or very close to it. Because if everybody's anticipating MicroStrategy hits $1,000, is it going to hit $1,000? Maybe, but based on my analysis of the markets, when the market is very sure about something and they will fight you for it, right, to prove that they're right instead of just waiting to see who's right, that is a top signal. And so when we see things like this, like what do we call this candle in the MicroStrategy nation? In my view, this is called exit liquidity. But the MicroStrategy ecosystem doesn't see this. They're just like, no, this is God candle. This is a God candle in the MicroStrategy price. Well, it may be a God candle, but what have we heard Michael Saylor state? And what have we seen MicroStrategy actually do? When the price goes higher and the NAV is basically almost the same, there's a premium to the NAV, which is the net asset value, the Bitcoin underlying, or the actual value of the company. Well, guess what? They're going to sell shares on the open market to go buy more Bitcoin, and people are cheering this on. But they're putting more shares in the circulating supply, which dilutes your shares. And they're taking liquidity from the market that if they were not selling, the price potentially would have gone up. But now they're selling into that liquidity. So effectively, this is exit liquidity. But who is it exit liquidity for? In some ways, it is exit liquidity for MicroStrategy. MicroStrategy is essentially cannibalizing itself to keep the prices going higher, but as the prices are going higher, they're selling into the prices to go buy more Bitcoin. And this all relies on the Bitcoin price going higher. And it will over the course of time. But remember, as we're moving on, MicroStrategy's dollar cost average continues to rise. From the beginning of this year, or 6 months ago, something like that, MicroStrategy's dollar cost average was around $65,000. So we've gone up just under about 8% in their total dollar cost average over the last few months. And this could be okay over the long term, but if we go into a bear market, which I believe we will at some point, what is this going to do to the MicroStrategy stock, to the debt, to the shareholders? But again, we see all of this very bullish sentiment, right? We saw JP Morgan buying the Bitcoin ETFs. Vanguard's index fund bought 542,000 MicroStrategy stock shares for $165 million at an average price of $305 per share in Q1. Their holdings are 2.59 million shares worth $1 billion. And people are like, oh, well, this is why you should be buying MicroStrategy, because all of the big, indices are buying the stock as well. Could be true, but that doesn't mean the price of the stock is going to continue to go up. You can have people, like, think about it. If you're going into a bear market, people are buying those dips, but we still go lower. And why? Because there's more exit liquidity than there is entry liquidity. And so when we know MicroStrategy is going to be selling into all of these rips in the stock price when it goes into a premium of the NAV, they're going to keep selling. And by the way, remember, MicroStrategy's stock right now is basically double the valuation of the actual underlying crypto, right? They hold right now, you can see, it doesn't show me the total number. Okay, it's probably going to show us here. I don't see it. They have 568,000 Bitcoin. I don't know why they don't show the total dollar, but whatever. 568,000 Bitcoin times $103,000, right? So the market cap of their Bitcoin is about $60 billion, but the market cap of their stock is almost double that. And so effectively, they could still keep selling until we hit that $60 billion and then keep buying more Bitcoin. And yes, in a bull market, it looks very bullish and very good, but that can all turn around. And to kind of give you for instance, of the fact that this is exit liquidity, and it's not just happening with MicroStrategy or with Bitcoin. Solana news just was reported by Marty Party. He said Pump.fund, that's the meme coin platform on Solana, has transferred 132,000 Solana worth $23 million to Kraken as part of its ongoing practice of selling transaction fee revenue. And so they're selling Solana on the open market, and they're being very obvious and very clear about this. And then the Solana holders are like, but Cryptoviser, it's not that big of a deal. It's only $23 million. I'm like, yeah, but that's just Pump.fun. Think about all the other meme coins that have been extracting value over the last 3 to 5 months. And think about all the ongoing value extraction out of the ecosystem. We see it live as the price and the market cap of Solana continue to struggle to maintain these higher levels, which is, again, another top indicator. So this brings us all to MicroStrategy, right? So one of the things we've been talking about with MicroStrategy is this disconnect from what MicroStrategy's actual thesis is and their ability to kind of withstand long-term downward pressure in the market. The thing that I always think about is the saying that the market can stay solvent longer than you can. And so if you're shorting the market, a lot of people who short the market lose. And a lot of people who long the market, right, lose as well. This is why a lot of big money, they don't actually play the market as much as people think, right? People think traders are every day just sitting at their desk like, oh God, sell this. It went down 2%, sell it, buy it now, buy it 2 minutes later. And like, that does not happen, right? As I've explained, a lot of trades are just very one-time, very, very massive gain trades, right? Yep. A lot of patience. And then when you see that pump, you're selling into it. Because listen, guys, we have a fear and greed index for a reason. The fear and greed index is here to show you when people are being greedy. When people are being greedy, that is when you sell. You got to be part of the greed as well, right? Because people are getting greedy in the fact that they're buying the market at all-time record highs, which literally we're at right now. And MicroStrategy's buying, and people are cheering this on. GameStop is going to be buying, cheering this on. But when somebody sells, people don't cheer it on, right? And so this is where we get into irresponsibly long MicroStrategy. So we're going to be talking about this kind of conversation in the group about Josh Mandel, who he was a big, basically like MicroStrategy maximalist, but he's really a trader in the markets. It says he was with Solomon Brothers in the 90s. Bond portfolio analysis, government desk, long bond trader in derivatives, short dated options. And then he worked at some other financial institutions as well. And so what he's been showing in the irresponsibly long MSTR group over the last few months is he has had a multi-million-dollar portfolio in spot MicroStrategy and also derivatives like options in MicroStrategy. I think the total portfolio was like $30 to $50 million. And so he recently sold all his MicroStrategy just within the last few days of me recording this video. And the community is going nuts, absolutely nuts. So Gladiator said, Josh Mandel is bearish on MicroStrategy, but bullish on Bitcoin. As we've talked about, right? You can be bullish on MicroStrategy and also bullish on Bitcoin, but also understand that MicroStrategy, while yes, it's going to go up, the fundamentals of what they're doing is highly risky. And it's not just highly risky to the shareholder, but it's highly risky to the whole crypto ecosystem and Bitcoin. But if you're holding MicroStrategy, there's more risk than just holding the underlying asset. Because remember, MicroStrategy only has about $60 billion in Bitcoin, which means the rest of their business is worth 60 billion as well. It's not. And so they're overvalued. Bitcoin is not overvalued. The price of Bitcoin is just the price of Bitcoin, right? And so that's one of the main things that you have to look at. But you also have to look at all of the leverage, not just that MicroStrategy has, but other people. And that's what we're going to be going over now. So Gladiator wrote after Josh Mandel basically sold his portfolio, he said, hear me out. Even if Josh is right about everything, and we're going to go through why he sold in a minute, if Bitcoin goes to $444,000 and MicroStrategy gets added to the S&P 500, it's going to moon. Well, first of all, we don't know this is going to happen, right? First of all, $444,000 Bitcoin. I don't know where he's coming up with this figure. Like, based on what? Based on what? My thesis, and we just heard Tim Draper's thesis, is $250,000 this cycle. My thesis is below $250,000 this cycle. Because, guys, the liquidity has already been coming in. The ETFs have already been buying tens of billions of dollars over the last couple of years in Bitcoin ETFs and Ethereum ETFs. And MicroStrategy has been purchasing a lot of Bitcoin as well. And this is where we are at today. So if GameStop buys $5 billion, do you think that's really going to have an impact on the price? Like, do you really think that's going to have an impact on the price? It's not, because MicroStrategy just bought, how much? They bought, I got to do the math again. Jeez. 14,000 Bitcoin, and they spent basically $100,000. So that's $1.4 billion. So they bought $1.4 billion in one shot. The price may have went up a little bit, but not significant. So if GameStop buys $5 billion, maybe the price will go to $110,000. Okay, that's not $444,000. And so where are they coming up with this number? And by the way, because MicroStrategy may get added to the S&P 500 doesn't necessarily guarantee the price is going to go higher, especially if the S&P 500, like traders are looking at it and saying, wait, the Bitcoin underlying this company is half of the overall valuation. So we need to buy very little and wait. And the thing is, again, the market can be solvent longer than you can. And so these big traders, these big companies, these big organizations, and these big indices, they don't have to buy right now just because it can be included in the S&P 500. So this guy Gladiator is basically putting all of his eggs in the basket of MicroStrategy and $444,000 hitting, and the S&P 500 MicroStrategy getting included in that. That's like playing a 6-leg parlay in sports betting, where you say, okay, this one's going to get a home run, this one's going to get an RBI, this one. Every single thing has to hit in one game for you to win. Like, what are the chances of doing that? That's very, very low. That's why the payouts are much higher. So yeah, when I see things like this, to me, this is a bearish sentiment, because it's not just Gladiator saying this. This is all over, right? This other guy on X said, MicroStrategy is going to $1,000 plus. It will split 10 to 1. It will go to $1,000 again, split 10 to 1 again, and then repeat. You will never run out of shares if you sell off a little bit of your position for income. So with this, I go back to what I was just talking about with $444,000 and S&P inclusion of MicroStrategy. What makes this guy believe that MicroStrategy is going to $1,000, especially when Michael Saylor said if the price goes above a specific premium, we're going to start selling shares in the open market. And by the way, the reason I'm talking about MicroStrategy so much is because this is a perfect example of how crypto and Bitcoin and the community are going to react when they find out the billionaires are selling. This is why the billionaires are setting this up. They're saying, oh, extended cycle, the top of the market is going to be in 2026. You just got to wait another year. So let's all do this together. Meanwhile, they're going to be selling. There is no doubt in my mind they are going to be selling, and probably are selling already, and probably already rotated multiple times in this market, right, to multiple different cryptos to keep increasing wealth. And so they're going to keep selling. And so they have to keep everybody, oh, no, we're not selling. No, not selling right now. I mean, the market's going to top next year. We're not in a top pattern this year. Meanwhile, the smart money, they're looking at the market and saying, whoa, there is way too much risk. There's way too much risk. Why do these people believe that MicroStrategy is going to go to $1,000 when Michael Saylor is telling you he's going to sell more shares in the open market? That's going to keep the price suppressed. What makes you think that they're going to split 10 to 1 because they already did it once? Again, they may split if they go like $4,000, but it's not going to get to $4,000 because they have literally 10 billion shares that they can put on the open market. Just in January, they added 10 billion shares, right? That's the maximum supply. The circulating supply, I think, is around 300 to 400 million shares. So they have a lot of shares that they can issue on the market. And so there's no reason for them to 10 to 1 split. And what are they going to 10 to 1 split? So they're going to go from 10 billion total shares to 100 billion total shares? I don't think so. I really don't think so. Anyway, Josh, the long-term trader in the markets and everything, he sold his positions, and he said this. And by the way, this was in response to somebody saying, "I'm starting to see how MicroStrategy becomes a Venezuelan bolivar," meaning they just keep inflating and inflating and inflating. If they keep issuing at the moment to prop up the top-heavy behemoth that must consume itself to remain solvent, like what we're just talking about. The only way they can buy more Bitcoin is issuing more debt. But the money for that is running out because we're getting to the first potential 2028 is the first debt payment time period. And so Michael Saylor's doing sell some shares on the market, go and get some debt. Sell some shares in the market, go and get some debt, and looking at multiple ways to raise money, but effectively it's cannibalizing itself. It's selling its own shares, so then go buy Bitcoin to push its shares up so that it can go sell more, to then go buy more Bitcoin. It will work until it doesn't. And will it work? I don't know. This is all an experiment. This is the first time we've ever seen something like this occur in the markets. And so I'm more likely to say it's not going to work than say it is, because we have to see the proof. And if you think that I'm crazy for thinking that, why hasn't Apple or Google or Amazon or Microsoft or any of these other large corporations bought Bitcoin? Because they're waiting to see what happens with MicroStrategy. Can MicroStrategy make it? Are they getting into too much leverage? This is either going to be the best play from a financial standpoint in the world history for MicroStrategy. It's going to be potentially a little rocky along the way. I think there's going to be more rockiness than anything, because no road to money is going to be smooth in my view, right? Anyway, so Josh explained based on this. He said, so here's the rub and the reason I sold MicroStrategy for now to buy other things. The Bitcoin that is bought to lower the loan to value ratios in search of a high credit rating should be thought of as segregated from all other Bitcoin. And so effectively what he's saying is MicroStrategy is creating all of this debt to then show that they're credit worthy, so then they can get a credit rating. And if they get a high credit rating, they can even get more debt and they get more financing. And there's a lot of other benefits to that. So there's a theory that that's what they're doing. Whether they are or not, I don't know. But what Josh is saying is all of this debt should be segregated. So if, for instance, if MicroStrategy takes out, let's say $5 billion in convertible bonds or whatever the kind of debt they take out, $5 billion, and then they go buy $5 billion worth of Bitcoin. Let's say that's worth, I don't know. Let's say it's 200,000 Bitcoin, for instance. What Josh is saying is they should segregate that. So it shouldn't be part of you as a shareholder believing that you own that stock, right? And that stock has underlying Bitcoin. Because remember, MicroStrategy 21, which is Jack Muller's new company, all these companies are going for Bitcoin per share. But what Josh is saying is all the Bitcoin that MicroStrategy owns, 570,000, right? If you own a large portion of MicroStrategy stock, you don't actually own that Bitcoin, because if the company were to go bankrupt or were to have to pay back that debt, the debt issuers, the people who provided the debt to MicroStrategy, they're the first to get paid back. And so what he's saying is until the debt is paid back, that Bitcoin should not be part of the shareholder Bitcoin per share, because it's not yours as a shareholder until the debt is paid off. Now, thinking of it this way, the way that Josh has explained, I've never thought of it this way. But what he's saying does make sense. Most shareholders believe that because they have 570,000 Bitcoin worth about $60 billion, it's like, oh, well, half the market cap, half of my share is actual Bitcoin. But what Josh is saying is it's actually less than half because all the debt that hasn't been paid off, that's not your Bitcoin yet. And if the company does go bankrupt or does default or whatever, that's not your Bitcoin. And people are like, oh, that's not going to happen. They're going to pay back their debt. No, no, no. The convertible bonds convert to shares. And so if they convert to shares when we hit $1,000 or $2,000, whatever you're anticipating, those get converted to shares. And then what do you think those shareholders are going to do? Those debtors, the issuers of the debt, they're going to sell at $1,000 because when they issued the debt, it was at $100. So now they got a 10x on their money. That's how that works. And so Josh continues, if they sold $1 billion worth of bonds or their STRF debt instrument, MicroStrategy, they would want to they would want to segregate 1.5 billion worth of Bitcoin in order to over collateralize the newly added bonds per the understanding with credit agencies. And what happens on the stock side? Suddenly, Bitcoin per share drops as Bitcoin is moved into a silo for the benefit of debt backing, and thus suddenly the net asset value actually jumps even if the price of the stock is unchanged. So if you know that all of this is happening up ahead, you would now view MicroStrategy stock as being more beneficially dilutable. So you would sell more MicroStrategy stock. He said, I will stop there and let that bounce around. And I would agree. If you know they're going to dilute your shares of stock, you probably shouldn't be in the stock. Like if you know they're going to do that, because remember, they're not in this for the short term. We got banks buying Bitcoin ETFs. We have institutions buying MicroStrategy. We have indices buying MicroStrategy. They're thinking about long term. And so if you're thinking, oh, well, they're gonna go $1,000, then we're gonna stock split, then we're gonna go to another 1,000, then we're gonna stock split again. We're just gonna keep stock split. We're gonna be multi-billionaires from this, not realizing that they're actually diluting your shares continually. This is the same thing that happens in crypto. And this is why I talk about coin burning versus coin inflation, because a lot of these ecosystems, the numbers that you see here for circulating supply, people don't realize this is based on the circulating supply, the market cap is based on the circulating supply. A lot of cryptos, the circulating supply is less than the maximum supply, meaning they continually inflate and inflate and inflate. And anytime I make a video about this, people are Cryptoviser, you're just fudding. It's like I showed the data specifically like Cardano during the bear market. We showed from 2020 to 2025, the Cardano inflation has been about 1 billion coins per year. And people are like, oh, no, that's not a big deal. It's like, what do you mean that's not a big deal? Billion coins out of 30 billion coins that are in circulation. That's, 3% or something like that? I don't know. You guys do the math. Anyway, moving on, because there's a lot more here. Many of you guys know Fred Krueger, who is another investor, and he's a Bitcoin maxi. I believe he trades the market as well. He said, I think products like MicroStrategy, MSTX, which is a MicroStrategy 2x long leveraged ETF or product, and then MSTY, which we've talked about before. This is yield maxes, basically covered call strategy ETF. Basically, the share right now is about $25. And then every month they do a dividend based on the performance of their covered call options. Now, in a bull market, this could be very lucrative. In a bear market, the payouts are not as much, but we're not going to get into all of that on today's video. These all will amplify the downside in the next bear market. And I would agree. I've talked about this before, that MicroStrategy, although I like talking about crypto and Bitcoin, MicroStrategy, in my view, is the risk this cycle. Or maybe not even just MicroStrategy, but MicroStrategy's thesis is a risk because more companies are doing what MicroStrategy is doing at the top of the market, in the midst of the bull run, in my view, at the final stages of the bull run. And so what does that lead up to for a bear market? A lot of collapses, a lot of bankruptcies, and a lot of downside in the market. This is the same thing that we saw with FTX in the previous cycle. The risk there was when Terra Luna went down, Celsius, Voyager, 3 Arrows Capital, BlockFi. Those were the keys to know FTX was going to go down. We didn't necessarily know it was going to be FTX, but we knew the downside wasn't over. At least the smart money did, right? A lot of people were like, no, Cryptoviser, you're just fudding. It's like, okay, I mean, I'm just telling you my analysis based on all the information that I've gathered on the market. And so Fred continues about these products amplifying the downside in the next bear market. He said, people like me and a lot of Bitcoiners have hodled through the last two bear markets. The only ones who did it were people who held in cold storage. And by the way, if you want a Ledger crypto wallet, use my link down below. It brings you directly over the Ledger website, and you can get a cold storage hardware wallet to store your crypto. Using my link down below does help the channel, and it lets them know that I sent you over there. And so he says the ones who made it through the bear markets were people who held in cold storage, people in Celsius, BlockFi, etc. They got wrecked. These leveraged plays are different. MNAVs, which is the net asset value, can collapse. Dividend yields can evaporate. Forced selling can and will occur. He said, I thought that institutional adoption would strengthen ownership this time last year because I expected mainly ETF adoption, but we are back to the derivatives game. Bigger upside and bigger downside. And I agree completely. And these are top signals, guys. When people are going leverage, and like I saw a post, whether it's true or not, I don't know, but I saw a post that somebody bought Misty, MSTY. This is the yield max that pays dividends. They took a refinance on their home for like $500,000. They bought Misty, and they're making about $50,000 a month or something like that, $20,000 a month in dividends. But they're not thinking about what the downside of this is, the tax implications on those dividends, right? Because yeah, if you're getting 100% of what you put in dividends every single year, let's just say for easy numbers, right? You're still gonna have to pay 50% tax on that or 40% tax on that, and you potentially are gonna have NAV erosion from the actual price of MSTY. A lot of people don't necessarily understand what NAV erosion is, but when you understand what NAV erosion is, it's not good because, yes, you can recoup your money in the dividends, but if you're losing all of your valuation in the underlying asset, that's a problem. And again, we're in a bull market right now. And so all these products seem to be doing fine. People are making a lot of money, people are doing great. But this is when you're feeling that way, it's the time to get fearful. And in my view, fearful means getting out of those products. I told my viewers in the middle of 2022, right before the FTX collapse, I said, guys, we had all of these companies, Celsius, BlockFi, 3 Arrows Capital, Terra Luna, all of them collapsed. And why did they collapse? They were all built on leverage, borrowing and loaning from and to each other. And who was involved in that? We all were. Because people were using these platforms, Celsius, BlockFi, all of the Gemini Earn, they were using these for percentage gains in their portfolio just for holding the coins. And again, in a bull market, this works. But when everything goes down and coins are lost, especially when there's over leveraged plays. And MicroStrategy potentially is the most over leveraged play in the history of these markets. And that's where the risk is. But a lot of people are not seeing the risk. And for me, that makes me extremely fearful. And it's a top signal, guys. It is a top signal. So this user responding to Fred Krueger said, and by the way, he is the CEO of Pet Express and Sri Lankan AI researcher. He said, leverage does not equal long-term conviction. It's a volatility accelerant. And I would agree. When you are in leverage, whether you're in a leverage ETF or you're just taking out leverage yourself, which means you're taking out loans or margin, these are short-term trades. That's what it's supposed to be for. You don't take out margin for a 10-year trade unless you're like buying a home. That's a different type of leverage. He said MicroStrategy and yield max MicroStrategy stocks equal Bitcoin and corporate balance sheet beta, gorgeous on the way up, unwinds, get margin call physics on the way down. MNAV melts, which is the net asset value. When Bitcoin goes down, asset side shrinks with all of these other products that are built on MicroStrategy. Convertible and preferred holder delta hedge, right? So this is the convertible and bond holders. What do they get? They are going to get the upside. If anything happens to the company, you don't. And so remember, the holdings of Bitcoin per share is technically less because of all the debt with these companies, right? And then bond covenants force sell Bitcoin to pay the debt, right? So when the debt is due, if they don't have the cash, they have to sell some of these stocks to make it up. To take out more, think about it. If they were to take out more debt to pay back old debt, while they may do this, what is that actually? What is that? What is that? Ponzi, right? Cold storage hodlers only face the price risk. I mean, there's other risk of losing your wallet, but leveraged wrappers add financing risk and counterparty risk and liquidity risk. Institutions now own Bitcoin via both ETFs and derivatives. The mix magnifies tops and bottoms, he says. Play the wrapper for torque, but size them like options. Limited core, strict exit rules, right? So that means putting only a little bit of your core position into these derivatives, into the leverage, and have strict exit rules. If this happens, I'm pulling. If this happens, I'm pulling, whether it's to the downside or to the upside. A lot of people are not going to do this. I would say most people are not going to do this, even probably many of you, because when you're at the top of the market, people don't see it. The only way you actually know you're at the top of the market is when you're not at the top of the market anymore, right? When you're at the bottom of the market. That's when you realize, like people realize now that the Trump pump was the top of the market, at least in the last year, right? This was the Trump pump, and we've come down and now we've reclaimed. But in the next pump, people are going to be super bullish, right? And this is where I believe it's probably going to be the best time to exit. Because if everybody believes the extended cycle, what do they think? Everybody's just going to wake up one day and everybody very orderly just go to X and make sure that Raoul Pal says today's the day that we're going to sell, and everybody just very orderly goes into their Coinbase accounts or Gemini accounts or Kraken accounts or Binance accounts and just sells very orderly, just very orderly, and that will have no impact on the price. That is not going to happen, right? So you have to be in front of it. And so somebody wrote to Josh, who sold his MicroStrategy position. And again, by the way, this is the same thing that I tell you guys on this channel, right? I make my own financial decisions for my own portfolio. You don't have to agree with it, and that is totally fine. You don't have to agree when I buy, you don't have to agree when I sell. But it's my portfolio. If you're mad that I'm selling, something's wrong with your strategy and thesis. And personally, I don't really care what anybody thinks. If you think, like people tell me, Cryptoviser, you're missing out. You're missing out. You didn't buy Cardano. You're missing out. It's like, I'm not missing out on shit. Right? My portfolio, like I've already made my money within Cardano. In the previous cycle, this cycle, I'm not focused on Cardano. I'm not focused on a lot of coins. I'm focused on a very few coins that I think are going to have very high impact plays. Some of those we talk about on this channel, some of them we don't. Same thing in the stock market. But yeah, like you have to understand like your own thesis and stand by it. And this is why I think what Josh is saying here is totally accurate. And I'm not really as concerned with what Josh did with his own portfolio. I'm more interested in the response he's getting. I mean, I didn't pull up all the responses, but I mean, most of the responses are, Josh, you're missing out. You're making a bad choice. This is a bad decision. Why do you think that the price is going to go down? It's like, he may not even think the price is going to go down. But for him, this is the right time to sell. Remember, guys, most people who were around in the previous cycle, they bought at or around $20,000 or less. And so even by today's prices, you're up 500%. Even if we go up to $150,000, so you're going to go up another 200%. Okay, big deal. It's not that big of a difference, 100,000 to 150,000. Now, if you bought it 100,000, 150,000, that's a big difference, 50% move. But when you bought it 20,000 and it's at 100,000 and it goes to 150,000, you're not looking back and saying, "Oh, well, I should have held." Like, what are you going to do? Like, you're up 5x, be happy with it. But people aren't, and they get greedy and they say, "No, but Cryptoviser, it may go up to 200,000." I'm like, "Okay, what's the difference between 150 and 200,000?" "Oh, but it's $50,000, Cryptoviser." "Okay, you have 15 Bitcoin?" No, I have, 0.1 Bitcoin. It's like, So what is the difference? $20? It's not that big of a difference. It really is not. And so that argument doesn't kind of stand either. But this is what we're hearing. Anyway, Josh responded to this guy who said, You panic sell, brother? And he said, there is something wrong with the way so many of my Twitter associations characterize the act of selling. He said, I did not panic sell. I just sold. I didn't dump my shares. I just sold. I didn't get wrecked. I just sold. Here in the city of one-way streets, one is celebrated when they buy. People love seeing large positions added. He said, I don't smash buy though. I just buy. Everyone loves when I'm buying and hodling. But pick a nice, safe time to sell without rocking the boat, and the friends didn't come for that. Gotta be a mission. And it is. This is the same thing that happened in previous cycles. There are people in these markets that you never listen to, ever, ever, ever. One of those may be the Cryptoviser, right? Many of those may be other YouTubers. I don't know. That's up to you, right? But you never listen to people who are not in the market because or generally are not in the market, right? They may not be in the market today because they sold, but generally people in the market. And you also never want to listen to people who are never selling because they're not in the market for the reason that most people go in the market. Most people go in the market because at some point they're going to sell. And so when they get mad at other people for selling, I think that they're just mad at themselves because they didn't sell and they don't want to sell. And or maybe they just have a very high dollar cost average and they can't sell because they won't be in profit. But that's not my fault. That's not your fault. That's not Josh's fault. That's your fault, right? That's your investment thesis. We've been talking about this for years on the channel. And so this idea that he panic sold or, he's getting wrecked, or even if the price doubles from here in MicroStrategy that he missed out. Guys, he made multiple millions of dollars on this trade, more than most of these people who are bitching and moaning and complaining about it. But the point here is that these are top signals. When a multimillionaire takes multiple millions of dollars out of the market and multiple millions in profit, and people are like, you're going to get wrecked. It's like, what? Like, I'm looking up to this guy. Like, wow, he executed a great investment thesis and strategy. And nobody's looking at, well, people are looking at that for sure, but a lot of people are saying that he made the wrong decision. While they don't have a $50 million portfolio. They probably don't even have a $5 million portfolio. And so he continued saying, somebody said, right, so if you believe there's a slim chance that MicroStrategy gets those ratings and the flywheel of bonds at the market, meaning selling the shares on the open market, gets activated and we are in a front of a bull run, that wouldn't make sense to stay long MicroStrategy, just confused why you sold your entire position. Because these are all what ifs, guys. Well, what if they get a flywheel of bonds? What if they get the at the markets activated? What if we're at the front of the bull run? What if we're not, though? What if we're not? Anyway, Josh said, with all due respect, everybody, I don't have a boss. And the great thing about this is I don't have to explain everything nor get second guessed. I do my best to be open. But if it really bugs you that I sold my shares, just pretend that I didn't. That's a good rebuttal, right? He said, I knew that if I sold MicroStrategy, I would have to answer many of you, do your thing. I'm a crazy MFer who started in a trailer park and now I'm here. I will never get so adjusted to wealth as to depend on it. It allows me the freedom to ride fast and lean into curves. And this is the difference between a good trader and a bad trader, in my view. You know when to enter, you know when to exit. Is it going to be the macro bottom, the day that we bottomed in the market? Probably not. Is it going to be the top of the market, the tippy top? Probably not. But if you exit in profit and hold that profit and wait to buy back in, this is where the winners will be minted. You guys see the titles on my videos, the thumbnails, millionaires will be created. Hopefully many of us will be these millionaires by the end of the cycle. But you have to sell to realize that. If you don't sell, you won't get there. And the thing is, all of this is exit liquidity. The Wall Street getting involved, it's the wealth transfer, right? They're taking assets that Wall Street doesn't have, and they're buying it from people who had it before Wall Street was interested. And That's the exit liquidity. We don't know how long this market's going to go on for. We don't know how long MicroStrategy is going to be buying. We don't know if they're going to keep getting debt. We don't know if they're going to keep selling on the open market. We can only go based on what we see, and that the answer is they're going to keep doing that until they can. And with all of these markets, with FTX, it worked until it didn't, right? There could be a catalyst that we don't even foresee that could bring Bitcoin significantly down. And then what happens to MicroStrategy shares? What happens to the debt? What happens to the Bitcoin? What happens if that occurs with GameStop, right? Everybody's cheering it on. Meanwhile, it's a last-ditch effort for GameStop. What happens if this happens with the Bitcoin mining companies? We saw it in the previous cycle. And to think that there's going to be no bear market, there's going to be no corrective phase, there's going to be no massive downside, when you see all of this bullishness to the fact that even though somebody was able to have a successful portfolio exit, it's not good enough. It's not good enough for you that they exited when you don't think it's okay. Well, that's not how these markets work, guys. And this is why I say, if you're going to wait and listen to all of these people saying, extended cycle, $444,000, like where did they even get this number? I still want to know, like where did they get this $444,000 Bitcoin? There is no way we're hitting that this cycle. No freaking way. And by the way, even if we do hit it, it's going to be for a very short period of time. And most of these people are not going to sell, right? It's going to be the smart money that sells. And then we're going to be at the end of the cycle and you're going to say, but Cryptoviser, they said that we have an extended cycle. And I'm like, but they don't determine what happens with the market. I'm looking at historical data based on the Bitcoin halving days from the halving. And we are in the 12 to 18 month period after the Bitcoin halving of 2024. This is the top of the market. Whether we're at the tippy top right now or not, this is the top. And I know there's a lot of people who are going to be selling over the next 6 to 8 months, but there's going to be even more that are not. And the moment I get a call from somebody or an email or a text or anything, and they say, Cryptoviser, how do I buy Bitcoin? Should I buy Bitcoin now? That day, my entire portfolio in crypto will be liquidated. Maybe not exactly that day, but around then, because every single cycle that we've been in so far, it has happened without fail, at or very close to the top of the market. I mean, talking about within days. Somebody who never talked to you about crypto before, but you talk to on a regular basis, brings it up. And by the way, it's the same thing at the bottom of the market, right? The bottom of the market, when FTX collapsed, I was hearing from people saying, should I sell my Bitcoin right now? And I'm like, I don't know what you should do, but I'm buying at $15,000 Bitcoin, right? Because we knew that was the bottom of the market based on all the factors that we just covered. This is just the opposite. This is the top of the market. Everybody's elated. We're going higher. We're never going to stop going up. They can't see how the market will not go up. I mean, if we just look at the general macroeconomic picture, we also thought the Federal Reserve was going to be cutting a lot quicker than they have and a lot more than they have, and they haven't. And the tariffs have gone on longer than most people thought. What is going to be the impact from 6 months from the purchases that they're making now? Because remember, a lot of companies, they have a 6-month delay. So the tariffs, even if it lasts for 1 month, that means at some point in the future, we may have higher prices, even for 1 month from this time period of ordering. And if that happens, how is the market going to react to that? How's the Federal Reserve going to react to that? How's the money printer going to react to that? And more importantly, how are the risk assets like crypto and MicroStrategy, which are highly leveraged bets on crypto, going to impact everything? And so if MicroStrategy or any of the companies similar to MicroStrategy, like that's when I talk about MicroStrategy, I'm not just talking about strategy, I'm talking about all these companies that are acquiring Bitcoin with debt. If there's a downturn and they sell, there's going to be mass fear in the market, and that's going to cause further liquidations and more panic selling. And that is really going to be the time that there's going to be no exit liquidity in the market. And so you go put an order in to sell your Bitcoin at 100,000, the price is going to go down to 90,000. It's not going to fill. Then you go to fill it at 90,000, it's not going to fill. And then it goes down to 80,000. Then it doesn't fill, it goes down to 70,000. And all along the way, as the price is going down, more liquidations, more market selling, more liquidations, more market selling. And the buy side of the market is going to effectively be ceased up based on, I don't know, many different factors. This is one thesis and theory. Maybe I'll be wrong on this, and I'm okay with being wrong because I'm just making the best decisions I can for my portfolio based on all the information that we have in front of us. And so I want to know from you guys, do you think that we are at or close to the top of the market? Do you think that this 12 to 18 month time frame is going to be the top of the market? Or do you think that I'm just, a little bit too cautious here, or maybe fudding a little bit, or what? Like, where do you see this market going? Do you believe in the extended cycle? Do you think that we're going to go into 2026 at the top of the market? Or do you kind of agree with what I'm saying, what Josh is saying? Like, it's looking a little toppish right now, at least in these leveraged bets. Maybe we'll start to see some of the leveraged bets clearing out, and maybe that money will rotate into some other cryptos like Ethereum, which we have not really seen massive moves over the last year. Recently, we've seen a little bit better, but a lot of the altcoins as well. Same kind of scenario. Let me know down below in the comments. Don't forget to give this video a free thumbs up. Hit that subscribe button. That way you never miss a new video, and I'll see you when I see you. Invest responsibly and crypto on.